Good morning. What's up, B17? Clay? How are we doing? We could get a drop early this week, like Monday, Tuesday is kind of what I'm expecting. And then face ripping rally into Friday. We'll see though. Mm. The buy volume on Nvidia target hit. We were talking about this target down here, 121. Boom, 2 days. I should have held those. Oh well. All right. AMAT, another good setup. A lot of buying volume down here. A lot of buying volume. Very significant. Also, wondering if we're potentially mirroring 2020 February dump with our current data and chain here. Possible to compare. What the hell? That was weird. All right. Hey, we got some people on here. What's up, guys? All right. So let's go to Trump's trade wars. Let's see if we can get there with the 4 hour. Oh, it goes there. Nice. 2007. Here we go. Good morning. All right. So this is February 2020. Where's the 18? There it is. Here's 2018. There we go. This is the spot. All right. You can see here, market was at a top at this time, gapped, and then it just traded dead sideways. And then what is this? February. Let's go see. Let's see what February 1st, 2018. Yeah, I think Monday also stress the economy some based on long-term fundamentals. Huh. Yeah, this is a nasty drop, and this is right around the time of the trade wars. Um, and what's interesting is it's right into February. So, this is fast. They happen so fast. I was telling a friend of mine today, or no, yesterday. I think it was yesterday. I don't know. But I was saying it's going to catch everyone off guard. It's going to happen so fast that it's going to catch everyone off guard, and people are going to. It's going to be your least expected. This when the drop happens. A friend of mine, he does the buying and selling for one of the largest hedge funds in the country, and they're really heavy in puts. For they have a 5% allocation in puts out till June. So multi-billion-dollar firm, and they got 5% in puts. This is the heaviest allocation into hedges and portfolio protection that they've had in a while. They're expecting between a 10 to 20% correction before June. So that puts us sub 5,000, right around 5,000. So let's just take a look here at this move. I think this was the one that does it. Yeah. This 12% right there. Yeah, that's 300 points. What's wrong one? Really from this drop. So, all right. So if they do 12%, that puts us roughly at 600. That's 5,400. So roughly like 52 to 5,400. Let's go now look at the weekly. So here's the weekly. We got top here. Pretty good anchor right there. It's been respected. August low. Nice big rising wedge on the weekly. Let's go to the 4 hour. So we're continuously, so we made an all-time high early January or late January, and we're not making new highs. And the highs are not significant. But one thing that I want to note is if we do drop, oops, we just turn this up a little bit. If we drop, there's this shelf right here that is definitely going to catch us. This is a big spot. This was a previous high in resistance. And this is what I would be looking to uh, for a nasty bounce. But one thing I wanted to cover with me is the option chain. So I'm just looking at the structure. I mean, regardless, when we get these 4 hour candles, look at this: one big candle and then waterfall, two big candles, gap down. Now we have another big one. But the interesting thing is the last 4 hour candle, it's a spinning top. That's a reversal. So Um, do they rip us higher? They could. To me, it was really interesting how they flushed us and held us. They held a pretty big zone. Obviously, above 6,000 is a big deal. 6018 is a big deal. That's this wick right here. This wick, if that when that breaks, that's when we see like fast moves to the downside. You get one here. Once this wick broke, it flushed hard. Same here. It broke, flushed hard. Obviously, it didn't even break here. It just gapped over it. But the 6,000 to 6018 is a really big zone. So so we're gonna do today. First, I'm gonna address Nick's question on the Friday thing, but I want to just take a look at the structure, right? I was looking at this today, yesterday, and I'm like, okay, what's the pattern in here, right? Yeah, you got a high here, a lower high happening, right? It's still in a downtrend, technically, from the highs. But even then, you're not seeing significant selling. If you look at the volume on US 500, or let's just go to SPY, there was significant selling Friday. But look at it'll be very interesting this week to see if they actually sell us because every time that we see this, like say for example, they gap us down, they've been gapping us down on no volume. I've been observing this a lot. So like if you look at SPY here, these gap downs right here, there's no volume. Like look at this. So I've been trying to like figure out what the deal is. Like why this is like why are they gapping us down on this volume? Like there is less than on the 4 hour. What's that? 1 point. That's two. It's 1.5 million shares. They gapped us down from 608, excuse me, to 59 or 590. No fucking volume. But then they're buying. Yeah, I don't like to feel, to be honest with you. I I don't rely on that. I get it. It does feel like that, but that they like to perception and feel is just completely different, right? I mean, they're trying to make it look that way. At the end of the day, they're trying to make it feel like we're gonna fucking dump. I mean, the SPY puts have been lit. Yeah, absolutely, 100%. I agree. I agree. So I'm gonna go over a bunch of shit today. I think um, yeah, I do. It does feel like we're gonna dump 100%. However, I don't like to just lean on that. I can't because I've been burnt. Like just going, oh yeah, man, it looks like we're gonna dump, and then I see all these puts getting loaded, and then we don't dump, right? And they fucking squeeze it, right? And they squeeze everybody out, and then the dump happens when all those puts are fucking toast. It always least expected. It's gonna catch everyone off guard, right? So, but what's interesting is you are starting to see some decent sell volume, but they're buying this shit right back up. Um, and one thing that I like to notice is like, are they buying it up to dump it heavier, right? Because that can happen too. Like they could be accumulating for a massive dump to get the hell out. Yeah, I mean puts are hedge most of the time. 90% of the time puts are hedges. And they don't give a shit if those things go to zero. But retail, looking at flow nonstop, is thinking uh, about like, oh my god, I just saw 4 million hit the tape on SPY, February 28th. I just saw this. yeah, that suggests it's going to go down for sure. But to hang your hat on it is risky. However, to the actual broader market, right? And looking at structure, if you take a look here and you're like, you know what? If we buy puts above in this box with time, we're most likely going to make money most of the time, as long as we buy in the upper part of the zone, above this zone, in the top, right? So really above 80, 70 to 80 and above, if you're loading puts, you should be getting paid, right? Now, when you're at the bottom of the zone, you got to be careful. Okay, you got to realize the risk of it shooting back up. Personally, I would like to see is a squeeze up into this block early this week. I don't think it's actually going to happen. I think we're going to gap down tonight. I think we're going to gap down Monday, Tuesday, squeeze, Wednesday through Friday. That's kind of my thesis. I think we're going to see more volatility crush moving forward. If you look at the VIX, it's just stair-stepping constantly. Shoots up. Oh, Jesus. Just stair-stepping. So if the VIX gaps up early this week, I'm looking for it to get volatility crushed down, right? And then we're going to probably see another stair-step, right? And then up. That's what I'm looking for. So I'm not going to sit there and see the VIX pop up and be looking for puts. No, because it's not what they've been doing. It's not the pattern. Look at the pattern is VIX gaps right here, vol crush. VIX gaps, vol crush. VIX gaps, volatility crush. This is the pattern. Okay, so when we all of a sudden get a gap down, or we do get a gap down, we got to stick with the facts. The facts are they're crushing volatility every time they get it popping, right? However, I don't think that's going to last. I think that it's going to fucking get rinsed soon. I'm going to show you why. So I posted in my channel over the weekend about there's a specific chain. There's a specific chain that I'm watching that is the motherfucker chain. It's the motherfucker chain. Okay. And I'm going to go over some stuff. I'll be right back. I got to get the Kleenex. I drank too much last night and my allergies are going crazy. I was at my brother-in-law's. So, are you guys ready to get fucking mind blown here? Huh? You guys can unmute too. Like Neek, unmute. I want to hear your voice, bro. Golfer, let's go. Me and Neek are gonna play some golf soon.
Bro, we're coming back from a coffee shop and my wife's playing some raging EDM, so I didn't want that on the audio.
Oh, it's okay. We're definitely gonna tee it up soon.
I'd rather do that than San Diego. I didn't realize it was OC.
Yeah, what am I? I'm in Kodo right now.
Yeah, which that's the hills, right?
Yeah, yeah,
Yeah.
yeah. You're in San Diego, you said?
No, Bay Area. But like
Oh, Bay Area.
was looking to go play or like do like a small plane flight for a little golf trip and get round up a couple buddies, but I can't find anybody to commit to go that far, so I'm not even trying anymore.
Okay. Well, maybe we'll figure something out. Maybe I'll head up there. I've got friends up there
No,
too.
I don't mind coming down. I'm just saying, I'd rather do that where in your area than San Diego. I was looking at like the traffic that Torrey gets, and it doesn't even look like it's worth it.
No, it's nuts. I used to live in Hoya, and um, I I go play at Torrey because they give like these like local memberships that were cheap,
Yeah,
and it's fun. It's a great time. It's definitely something you want to do eventually, but it's it's definitely not. I mean, you want to ideally want to do it right after the tournament. You want to like
Yeah.
try you fill out the cards to get in, and then if you can get on the course right after the tournament, it's the best because then you can play both courses, tournament conditions. It's amazing.
Yeah, that makes sense.
But all right, let's get into this change. This is gonna blow you guys in mind. So I'm gonna switch my stream over to my Weeble account. Uh, Here, we'll change windows. Okay. All right. You guys can see my Weeble, right? Yeah. Okay. All right. So, um, I can't tell you how, I can't show you. I don't have the chain for Friday, but I'm going to go over something that if you guys focus on this, it's going to change your fucking life. Okay. It's, uh, it's really important. And I've gotten away from it a little bit. I've gotten away from it a little bit. I stick to it. I'd say 80% of the time. This is like probably my one of my aces in my sleeve that I don't really talk about. Okay, a little bit here and there. Some of the OGs, like when we hit 900 percenters, like back in September and in October, and like just cruised on them from top to bottom, is because of this strategy. Okay, and it go and this is about like putting the effort in and understanding what exactly are you looking for. You're not just in you're trying to use like pure logic and reasoning to analyze the move that's about to happen based on what you're reading. Okay, so we're going to talk about reading the chain. Okay, now how did I know we were going to flush right before data? Anybody? No, just it's all right. I don't know, but the first reason I knew we were going to flush is because we have NFP. Why is NFP a big deal? Okay? Because we have ripped off NFP, right? However, the chain, I was telling my friend this, I said the chain is structured for this past Friday. It was structured in a way where they could rip it and dump it and get everyone paid that was already pre-positioned in the chain. The chain was structured in a way where we you could see those puts can go to zero, but they can also go 900% too from zero. As you could see from the movement, right? They shot it up to 6,100, and then the speed of the move down juiced everything up, right? And so it doesn't matter. So, like when you're looking at the chain, you got to be you want to really understand the data and the pattern that's setting up. Okay. And we talked about reflexivity last week within the options, right? The IV, the volatility on the volatility, which is vol on vol means the volatility on the IV, meaning if I have an implied implied volatility, right, on my options, there is volatility on that implied volatility within that option, right? So as the market shoots up, the volatility on that option, on the call options, is expanding. It's getting more expensive. More people are less likely to buy calls, and so then the market makers are pricing the vol higher to protect themselves, right? Now you have data that's about to get released. What would you do if you were a crook, right? What would you do? You would run the market up, get everyone chasing the fish in the barrel. right? Long the market. Put your stops in. Oh, now what happened? Sells says puts. What the fuck? Right before data. What did I see? Well, when you look, so here's the strategy. 5-minute chart, 5-minute option chart.
Real quick, were you calling that out that morning, that Friday morning?
I called them out right before they're done.
Okay, yeah. See, I wasn't on the so I didn't get to see it. Okay,
I think I alerted it too, actually. Let me see. 10,
you might have. I was
7.
driving, and it's like one of the hardest things for me, like the Friday. But I'm starting to realize
It's
a pattern
fine.
here makes more sense. Yeah,
Where is it?
I remember
Yeah,
you said data in
yeah, I
five
did.
minutes.
I did. The alert was 3 minutes before data hit. SPY 605 put at 0.52. 50 cents.
Yeah, got it. Yeah, I didn't even see it. Damn, nice.
Those things fucking went bonkers, like instantaneously up 150% within
Yeah,
seconds. But all right, so anyways, the 5-minute chart, okay? And I'm not going to be talking about I don't talk about this shit at all. So put this in your back pocket or your Gucci bag and hold on to it. So 5-minute option chart, when you see multiple blocks of over 1,000. Like, so you'll see Clay, hey, look at this chain. He fucking knows. He's been in here since day one. He knows what happens. But there's a lot of different things that go around it. It's not like, oh, well, I just saw a 5,000 or say it saw 1,000 block and a 1,500 block and a 2,000 block hit the puts. So I'm going to slam puts. It does not work like that. You cannot fucking do that. What you look for is number one, what time is it in the market? What data do we have coming up? What hourly change do we have coming up? Where are we at in space of the market? Are we into resistance? Are we into support? Are we in no man's land? Those factors are fucking huge. They are huge because if you're in no man's land or you're basing in like a off of a gamma level, they can literally throw down a 1,500 order of block puts or calls, and they'll slow drip them, meaning they'll sell them for like tiny gains or tiny losses. They fuck with people. I've been watching this for a long time, so I call it the slow drip. Right? You cannot fuck around with that. So when you do something right, and you say, "Wow, okay, we're on support," I see 3,000 calls being bought. Okay, is it maybe we're at, let's just say we're at 6,000, right? And then I see 1,500 of the 60 15s, and then I'm like, okay, well, are the 60 20s getting loaded? Are the 60 25s? Are the 60 35s getting loaded? How far out from spot price are they loading that size, and what's the premium? You don't have to know exactly the numbers like on the fly, but have an idea. Obviously, if the contract costs $500 a piece or 5.0, and you see 1,500 hit and price is basing and the contracts are on support, and then you see that that the next strike and the next strike also have a confluence that are getting stacked, right? That is confidence, that's conviction, that's giving you an area to define your risk. So let's say we're at 6,000 and you see those 15s and 20s and 25s getting loaded, and we're coming into the 2 p.m. algo or the noon reversal, and we've just flushed from the high a day down. Well, that's a high percentage play that you could take against a specific level on calls based on the data and what the money's doing. Because at the end of the day, like I love Wyckoff. Like a huge part of all my strategies are built within it. And I like, any strategy, SMT, DMT, PCP, whatever the fuck your strategy is, it doesn't really matter. But the only thing, but what is really important to me, really, really fucking important, is when people put millions of dollars and stack it accordingly on a chain. That's really important because retail doesn't have that money, and retail does not fuck with SPX much. You may think they do, but they don't. They're fucking petrified of it. That's why you don't see any Twitter accounts and like all this stuff showing like, oh, SPX gains, boom, 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 because they're afraid of it, right? Not many rooms mess with it because they get crushed if they don't know how to do it right. Right? They don't know how to define your risk. It's a different animal. We all know that, right? We all understand this. But that's why I'm saying when you see like big dick orders hitting the tape, right? And solid money hitting the tape, like you need to know that's not retail. Okay. These are professionals, these are floor traders, these are guys, trading this. Are they going to scalp it? Maybe. So, you have to understand too, where's volatility? Where's the VIX? Where is our levels? Are we going to get a pop? And if you get in and you have one or two contracts on those calls, don't be fucking greedy and look for the whole trend. Understand the time of day. Understand where your risk is. Okay, so for example, we top tick puts. Okay, well, you could sell 70%, let 30% run. Nobody knows that we're going to just fucking drill. We just don't. However, the pattern of NFP is multiple times. I think who did I send it to? I sent it to somebody. I said, I think it was Vince, my buddy, Bo McGinnon. I said, drop off data, pop into open, and fucking rinse off 7 a.m. shift. You know why I said that? Because we did the same thing in October and we did the same thing in fucking September off NFP. That strategy is called pattern recognition. Okay. You don't just say, oh, well, I see that this pattern's done this, so I'm going to do that. No. It has to have confluence. The chain was designed for Friday to make money both on calls and both on puts. Why did I know that we weren't going to rinse? Well, I've been tracking a whale since December 31st that had the 60. Sorry, I bumped the button. But since December 31st, I've been tracking an SPX whale that threw down 12 million on a block. That's not retail, and that dude ain't fucking around. Okay, he only trimmed 400 of those calls a week and a half ago for a double. Why would he only trim half? Because he's expecting a bigger move. Nobody throws 10 mil, 12 mil on the tape on SPX without knowing where the market's going. That's why, as Vince was a little bearish, I was not. I was like, we got to keep buying dips. We got to keep buying dips because this son of a bitch has not left. And look what happened. He closed this shit out at the top, near high of day. So he bought those calls for $4,300 a piece. He bought 12 mil. He watched. Now listen to this. I watched this asshole have his calls go from 4,300 a piece down to 1,600 a piece, and he didn't flinch. He didn't sell. And then they went up to 8,000 a piece, and he didn't sell. He trimmed. And then they went back down to like 2,200 a piece, and he still didn't sell. This last week. That's fucking crazy. And then he fucking sold Friday for 10,000 a piece. So he made a little more than a double, right? So the point is, Bank of America last year, I think it was last year or year before, went 100% in all their trades. Why would they go 100%? Because they're using our fucking money and leveraging the market and moving it wherever they want. They want the market to go up, they move the market. They want the market to go down, they move the market. The banks are running SPX. These hedge funds are running SPX. They're ones moving the market. So for me, by understanding how to read the chain and understanding what is an important aspect of the chain And deductively reasoning everything through it helps me understand exactly where we're going to go, right? Now, I don't hit it every time. That's not a big deal. But I've been spending hours and hours every night tracking and looking and combing. It takes a lot of effort, but I tell you what, it fucking pays, because when we get these nasty reversals, like for example, a couple weeks ago, I alerted the 60, it was, what was it? It was I alerted SPX puts overnight, right after the close. They did a fake breakdown. I saw them loading calls. So we loaded calls too. And I had multiple layers of confluence. So those calls went from $300 and they closed at 4,000 piece. And that was 5-6 days expiration. That wasn't just a guess. It was, what do I use? I use the option chain. I'm going to show you right now. Hang on. Okay. I use the option chain. We're going to go over this, but I just want to talk about it first. Okay. So, it takes effort. I like to use Webull to comb the option chain. I have my Webull chain set up. Oh no, dude, it's all good. Money time, bro. You're good. So I like to I have my Webull option chain structured specifically. I think it's posted below in uh, where is it? Contract TA maybe. Nope. Nope. That's not it. Oh, where is it at? Here we go. Let me think here. Yeah. So if you go into chain homework under master's class, go into chain homework, scroll on the top, and you'll see exactly how I have my Webull chain structured. Volume, OI, high, low of the day, implied vol, and last price. That's the only shit I care about. Okay. And then I have how it's listed, how the settings are. I have the strikes. I don't use just 50. I usually have them all listed, and then I fly through it. Right. And that's how I have it structured. So it's chain homework at the top. I'll put this over here. All right. So now let's get into it. Anybody have any questions on that? Like what we just covered, like about understanding the timing, how to read the chain, how to understand in real time. It takes a lot of effort. It does. I mean, that's why, like, in the mornings you see me like quiet because I'm flying through the chain. I'm looking at flow. I'm trying to think about gamma. I'm looking at all this stuff, right? And trying to decide, do I do SPX or do I go find a ticker to trade? So, go ahead.
I got something. So like close out Thursday, open up Friday morning, right? You're popping the chain open, combing through it. On that Webull data, you are able to see who's still positioned on there.
Yeah, absolutely.
Okay.
And then we
I didn't
also
realize
have
that
them.
was like live or day of.
So there's like a couple areas, right, to this. And if everybody on here should have a little action, a little money in an IBKR account, and you should all have these have Webull. Like whether you have 10 cents in it or not, I don't really give a shit. You should all have Webull because that's the best, in my mind, the easiest and most simple way to fly through a chain and to look at data and to find out overnight if you need to get into SPX on your IBKR account. I do this, but sometimes I'm just too tired because I do it so much that I like you've noticed probably lately I haven't been in chat and stuff late in the evening because I'm trying to catch up for sleep and I've got court on Monday. So, but the point is when you're combing, this is how you want to look at it. You comb the chain tonight. Like so let's just say typical day, market closes, 4 p.m. and then the chain opens up at 8:15, right? So 8:15 p.m., what do? You pop the chain open, you look at the chart, say, okay, all right, I'm watching football, whatever. Let me take a look at the chart. I pop the chart open, okay, it looks fine. We're kind of in a weird range. Well, let me see what the money's doing. Then you look at the money when you say, do I see anything that jumps out at my eye on tomorrow's chain, the next day's chain, this week's chain, right? And how far do you want to actually look and dive, right? Meaning, how far out? How many days out? How many days down the strike? No, you don't want to be looking at 10-cent strikes. Like, that's just stupid. Like, people that look at strikes that are like 100 out of the money, like, give me a fucking break. Okay. Sorry. But like, seriously, like, but if you're looking 100 out of the money for a month out, that's not crazy, right? Because what can happen if we get a 50-point gap down, those 100 out of the money's a month out, they'll triple, right? Because what happens? Implied volatility, the volatility, the vol on the vol on vol. We talk about this, and we'll be continuing to talk about this. The volatility on the implied volatility on the option, it rises, right? And it juices everything. Obviously, if you get a 4,000 put or a 4,900 put, the thing's not going to move much, maybe a buck or two, right? But if you get the 5,600 puts, right? Or the 5,700 puts for March, and the market dumps 200-300 points, those things are going to go parabolic. I'm going to show you something. Okay, now let's get into it. Anybody have any questions about that? So you're constantly using logic. You're constantly using you're using your brain, and you're using effort in a specific system to identify where the fuck money is. Go ahead. All right, so I have pulled up March 7th. Why would I be looking at March 7th? Anybody know?
The OPEX end of it next week.
March 7th. NFP. Ding, 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 ding. Why would I care about this today? Or why does it matter? Because it's fucking NFP. And not only that, but what did Neek say in chat about the puts? They've been fucking stacking them on SPY. Stacking them, right? Now check this out. Let me just double check my notes here before I open these up. Okay. Sorry, I'm just give me 1 second. I'm trying to make sure that this. All right, so it's the 4. Okay, there we go. I found them. Okay, so now let me ask you a question. Do you guys think it's a coincidence? 54.75. Yes. Okay. Can you see this right here, my cursor? See what that says? These were bought. Okay. 3,734 puts were bought in one order. Do you guys see that? I need to make sure everybody sees. Just throw one in the chat quick. This is the time in sales. This is the tape. Okay. Now watch this. I'm going to open up the contract chart for this chain. I'm going to find where this asshole loaded. Okay, so if you look at this volume bar right here, okay, that's the order. that went through right here because he bought 86, but when he put the order through, it filled in a block of 37, 37, 34, and then this one got filled like literally a second later. You can see the time. It was within a second. Like that is a one order going through. So, what day did they load? You see the date? They fucking loaded Thursday. This Thursday. They bought. This past Thursday. Weird, right? Weird. Kind of weird. Just saying. So
What, Thursday, what, like 5 minutes before close, it looks like?
yeah, yeah, yeah. Right?
Yeah.
Now you think that's fucking wild? Check this out. Well, you guys are fucking wild. It's funny. What does that say? What does that say? I'm on a different chain. This is the 5,500 puts. They bought 5 minutes earlier. They bought the 5,500 puts for the exact same volume block within seconds. The exact same to the number. They bought the exact same number of puts. And the order went through the exact fucking same. 3,734 puts bought, boom. 86 puts bought 1 second before. Let's go check it. Let's go check the chart. There they are. And when did they buy? The same fucking day. Same day. Did I just blow your guys' fucking mind or what?
Yeah, and same time, 5 minutes before close.
Yeah. Yeah. Same
Right?
size
1555.
to
Yeah.
the fucking dollar, like literally same size to the volume tick. Same date, same time. Why would they do this? You think that's fucking retail? Hell no.
What about below it, the fucking 6,000 one?
Bro, you have no idea.
Oh, it keeps going.
Yes, yes. Now look at the 60/50s. I'm teaching you guys shit here. So look at this. The 60/25 puts 6,900 OI. The 7,000 puts, not a lot, but the 60/50 puts 7,000 OI, right? Now let's go up the chain, up it. Why are we not seeing a lot of volume or open interest? Why is this? Nobody's going to look that far down, right? Nobody cares. Nobody's going to look that far down. But there's a shitload of fucking volume on the premium. There's over 3,000 here on the 6,000s for that day, right? Now let's go back down the chain and take a look at these 5,500s, and I'm going to show you guys something else. Okay, so let's go to the 1 hour chart because this will help. The last time we dumped, like legit dump, okay? Let's go to SPY. So when we were when the market hit 57.81 that week, the low of 2025 that week when it would hit like 5,800 roughly or just under, these puts, you can see here, you can't get too much data on them, but they shot up from roughly 2,400 a piece days before. Within 4 days, they went and almost tripled. They went up to 5,700 a piece. And that was only a dump from, hold on, let me pull it up. That was only a dump from 6,000 to 5,800 roughly. So that's a 200-point dump. And these, with all this time, went from, was it? Yeah, 6. Yeah, it was from here. It was from this point, 2,400 a piece to 5,700, like fast, right? And so that dump took, if you look at the SPY, that took from January 6th to January 13th to the 12th, roughly, right? And so in a matter of, what was this? Was that the 200-point dump? It wasn't even a dump. It was slow, right? It was pretty slow, but it moved down fairly quick. Not like super quick, but fairly quick, right? So think about this now. We're sitting here, and these are 900 a fucking piece, and they just loaded all this volume on the chain, up and down. Well, if we get a move to not 5,700 to, let's go back over here. Change windows. Okay, if we get a move, I'm going to go pull up the 8-hour, a little easier. If we get a move from here down to this shelf, roughly, this volume shelf here, let's just say 60-50, and it happens relatively quick within 2 weeks, because I mean, this could happen in 5-6 days. Like, because if you look at over here, in August, they moved us down from 55.50 to it was a 500-point dump. So roughly, 500-point dump in how many days was this? 5 days, 6 days. So it's the 31st or first to the 4th, 5th, whatever, 6 days, right? So 6 days they dumped us 500. So don't sit there and like think like, oh man, like it's so far out of the chain, blah 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 blah. Like if they want to move this damn thing down, that's why I kept saying to you guys earlier today is like I'm trying to figure out and thinking about the market. I'd like to look at the volume very closely. And I like to think, because I know how they move the market around. I know that even though the gap was down on this candle right here, it wasn't gap down on a lot of volume, but then they bought this thing bought more down here. So are they either they're accumulating, right? Accumulating down in here to distribute up higher, right? Or they're accumulating in this range to give us a bigger dump faster, right? There's two different scenarios. So we could see a new high and then squeeze everybody out and then UTAD, right? And dump. If that happens, those puts will still pay as long as we get the move before end of March or end of February, right? All those puts that we've been seeing. So you have to realize when you're looking at volume and you're analyzing it, you have to ask yourself, are they buying this up in this moment on the 5-minute, 4-hour, whatever to dump it? Or are they buying it up to move it up? That's a big question you have to be thinking about intraday. Huge question. Because if you look at the 5, no. Let's take a look. Here's the 5. This is Friday. Okay. All right. We see sell volume, right? You can see the volume down here. Sell, 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 sell. And then all of a sudden there's buy volume, buy volume, buy volume, buy volume, buy volume. Look at all that. And they didn't even fucking move the price. The price stayed within this box, right? They bought all this up, right? Walked it right up from 27 to 55, right? And then what happened? They sold the whole fucking lot. Pretty much. They literally just sold everything they bought here. They just fucking dumped it. That's understanding volume and reading it, right? So if you're trading this, like I traded calls from here up into here, trimmed, put my stop in, got stopped out here on the knife, right? And I think Vince alerted puts maybe. I think he woke up and literally alerted puts like right here or something. But the point is as you When you're done, I have a question on that. Yeah, yeah, fire away. Let's just talk about it now.
All right, yeah, it's real quick. While I'm on Weeble, I'm basically mimicking what you just did, and I'm scrolling all the way down on that March 7th chain. The further you get down, and I don't know if these are hedges or not, like the 51.25 and the 50.75 have 53,000 on open interest. Is it the same thing?
Yeah.
Which is five times what we just saw?
Oh, so you're talking about. All right, I'm sorry, I wasn't fully
Let me
fully
make sure I'm
focused.
on SPY or SPX. Yeah, I am. So March 7th, that chain that you were
Hmm.
at least when I'm scrolling right now on open interest, I'm seeing
Yeah,
the
the
52.
5125s and the 5075s have got a ton of open interest, like crazy amounts.
Is that like, I guess in relation to those other three spots that got hit on the 6th, would those not also be, um, I don't know, eyeball
Which
indicators
strike?
like,
What
oh,
strike?
it's 50.75 and 51.25.
Yeah. So if we look at where they bought them,
Mm-hmm.
right? So the cost, see, like obviously, if they bought these and they're really expensive, you know, obviously it's a hedge and it's getting fucking smoked, right?
Got it.
Right. But sorry. Um, all right. So let's see where they bought them. So we click on the volume bar.
Well, I'm only
That's the
asking because,
hourly.
like you said, 100 out of the money, but a month and a half out or whatever, that raises some eyeballs.
Absolutely. Right. And also think about it this way. We know for a fact that you don't need to be, you could be 400 or 500 out of the money, right? You could be 400 or 500 out of the money and still make 500% on a trade
Yeah.
with time. Because think about the speed of the December FOMC sell. You know what happened to that whole chain? Every fucking strike exploded thousands of percent months out. Months. Well, let's take a look here. I don't think I have. They don't give me the data for last year, but at least on this chart. But let's take a look where they bought these. Nick. So on so the 5125 puts, you have uh, 3,600 bought on my cursor. So look at this. Let's take a look at drawings. I just hate Weeble for like drawing shit. It's just not that good. But all right, let's.
It's all around January it's bought, right? At least I think I'm seeing the same thing.
Yeah, yeah. I'm trying to make it cool.
No, it's all good.
Right, so
I'm doing it on my phone, so I'm like I got fat fingers trying to scroll over it.
the drawing trend line. I don't want to use trend lines. I want to use something else. No, there we go. All right. So this zone right here, price stayed, and these contracts, which is really weird. I hate this. Undo. All right. Price stayed in this zone for these particular contracts between $6 and $6.50, which is really odd. So
Hmm.
this day, this was the 22nd. So on the 22nd of January, they loaded. They did one block of 3,600, and they did another block of 15,800.
Hmm.
So those were within 5 minutes of each other. Then 30 minutes, 15 minutes later, they loaded another 12,000 puts, right? And then
Yep.
5 minutes later, they loaded another 4,400. Like, so all the volume. So let's do the math. 3,600, 15,000, that's 21,000 roughly, 22,000. Then we got another 22,000, that's 30, that's 34,000, 4,000, 40, 30, 38,000, 38,000, 40,000, 40,000, 44,000, 40, 50, 50,700. The whole fucking chain was loaded this day.
Yeah.
The whole fucking
I guess
point.
I've never seen open interest that big, that far out, and that far down. That's what I'm like, huh?
Yeah, well, now I would say this is Fugazi, it's a hedge, yada yada yada,
Hmm.
bullshit, right? But this is different. Why is this different? Because we're in the midst of a fucking trade wars,
And the
right?
NFP thing, like you said, that same date.
And it's the same fucking date. However, here's the thing: if we're not even near, say if we're at like say, let's just say we're at 5,800 or 6,000 at that date,
Mhm.
those things are done. It doesn't matter how fast they move us down; they can't move us down fast enough to pay them,
Yeah.
right? And so let's go back to the other screen here. Um, this is like the real education. This stuff,
Yeah, it's
what we're
fun.
talking about. This is what pays. This is how you change your life. Like this is why I spend hours on the chain every fucking night because I want to change everyone's fucking life in here. I want people to take 300-400 bucks and have them go 10x overnight. All right, so
I mean,
this is the
mm,
18th. This is during the trade wars. This is it right here. I think it was this May. What? Why is this 2018? Oh yeah, that's why. It's over here. This was it. March. So coincidentally enough, there was a top um, right here. Listen to this. This is fucking freaky. So you remember when we just said all those puts were loaded? You even
yeah.
remember the date? January 20th, 2nd, right?
Hmm.
Look at the top. January
Yeah.
29th, 26th. January 20, the Friday was the 26th. So they could have been loading them the previous Friday on the 19th that particular year. However, it's just funny to me how and very interesting. And I think about this like the timing of the trade wars, the timing of a particular top of the market, right? And look at how fast it happened. One, two candles, and they were down 10% on the market, roughly 8%. That's huge. 8% on 6,000, it puts us at 5,700, is it? No, 10% is 600 points. Yeah, it'd be 5,500 roughly. 5,500 point move in 2 days. Sorry, that kind of a move, 8% move in 2 days. That whole chain, that all that money down the chain to the 5,100 strikes, they go parabolic. That's such a fast move. IV shoots up, the VIX breaks, shoots up into the 40s, 50s even, right? And then the volatility, the vol on the vol of the option chain of those implied volatilities goes from being where it's at right now, which is probably roughly, 14%, 15%. They go to like 50, 40, 45, 50%. So the vol explodes on the implied volatility of the option, which juices everything. Then nobody can play puts.
Hmm.
It's a small player. You see what I'm saying? So anytime a move happens to the downside aggressively, whether it pops the VIX 5%, 10%, doesn't matter. The cost of doing business is so expensive that the retail can just get fucking smoked. Because if you get a flick of a move to the upside, the implied volatility, the volatility on the put chain is going to crush those short dated puts, right? Because that volatility drops a little and that crushes the put contracts. However, what happens to the calls when retail's trying to buy calls? Now we're kind of getting into how to trade a high volatility market, right? What happens, is the guy's like, oh my God, I got the reversal. I got the reversal. But the fucking IV on the chain is at 43%, right? And the VIX is at 40, and he's trying to play zeros or 2 DTE calls off support, and the market moves up $30 and he loses money. He's like, what the fuck? How? Volatility, reflexivity. Because when you have the volatility on the implied on the IV at 40 to 50%, and the market moves. It cannot move fast enough to make money because the VIX is dropping so fast, and the volatility on the implied volatility on the option contract is dropping so fast you can't make money on calls. You can't. They need to squeeze it so fucking aggressive and so fast that the implied volatility stays high on the call side, right?
Mm-hmm.
And it supersedes the counter trend of the VIX dropping. Very important, very, very, very important to understand this. Like, this is bold because people blow their shit up all the time on high VIX environments. And that will not happen in my fucking room. Nope. Because it's better to let the fucking market rip like crazy, or you buy time. You buy a chain strike. IV is at 14, 15% a month out. Go way the fuck out of the money. Not too crazy, but you buy less contracts out of the money, be safer, and then you get that 20, 30 point move, you'll make money. That's how you do it, right? And plus, you don't really want to be fucking around when the VIX is that high, because if the market shoots up, say 50 points in a high VIX environment and everybody's getting cooked, you want to actually be looking for the little drop, like a 10-point drop. You don't even need much, because when the VIX is, here's the cool part, when the VIX is up there at 40 or 30, and then all of a sudden the market reverses 40, 50 points, and the VIX drops to 25 or 20, you catch that reversal from the top of a rejection and it drops like, $15 on SPX, you'll make 200-300% on that move. Why? Because the VIX is so high, and the reflexivity of the volatility on the implied volatility of the chain will have a 2 times effect on your contract. And that little tiny move, because you're in a VIX environment, it will pop the VIX from 25 to maybe 30, and then that will juice the whole chain. It will juice your puts, and then you, boom, get the fuck out. See what I'm saying? So it's better to play puts in a VIX environment off smaller rejections. Make sense?
Yeah.
Pretty dirty shit. So, but when you get it, it will also protect you a lot. So in the trade wars, they dropped it roughly, let's call it February first week, dropped it all the way into, that was quick, man. That was, so 10 days they took the drop down. So do we know when they're going to drop now? We could maybe get close to timing it between Vince's mapping and what we're seeing on the chain. But with what we're seeing is, it's got to be close. It's got to be right around the corner.
Yeah, because like
And
if I'm looking at the February 14th chain, because I just combed through
yep,
the whole next week while
exactly.
you were talking, there's not even a hedge on the call side at the 4,900 strike, the 4,950, the 5,000. Those are all lit the fuck up.
Yeah, but now I'm gonna counter you for a
Go ahead.
second.
Yeah.
So let's go back to the chain where Nick is at, right? When you're looking at the chain, go to Friday. Yes, because Friday is a motherfucker chain too. Right. So now let's say, okay, you're like, oh my God, the chain structured so bearish. This is great. I love it. However, what you need to do is this: go down to the call side and see where these assholes are parked. Deep, deep, deep in the money. Deep in the money. Right? Because 300 calls at 4,000 at the cost of almost what's that? 200 grand a piece? That's a lot of fucking cheese on the table, right? Right? So I know for a fact that as of Friday pre-market, for this upcoming Friday, we have 400 million dollars sitting on call side. There's 171 billion on put side. This will change on Monday. It will probably drop to 300 million call side, probably pretty close to a 50-50 split. My guess is, right? But we have to realize there's 1,600 calls sitting there on the 5,000 strike at 100 grand a piece, right? That's a lot of money, right? So if we saw this whole chain was loaded, loaded, well, then we'd be like, hold on a second. These are all probably hedges, and they could get all smoked. That's
Mhm.
really the case, though, right? So you do want to look at these types of things, and then use your brain, use your logic, and understand. But look at the volume. We have some asshole who sold on Friday 25 calls, 25 times 100 grand a piece. A lot of money he just sold, right? 2.5 million. Why would he take money off the table when he's got it parked so deep where IV and theta can't really get to him at all? Well, probably because he might think we might have a fucking drop on our hands, right? So, and then also if you look at the open interest too, all the way down where there's no money, like meaning like you can see something similar to March, right? 56,000 puts, 50,000 puts loaded really dirt cheap, right? So where did they buy these? I don't know, probably a while back. Let's check. These are cheap puts they bought. Oh wow, interesting. No. There's just not enough volume there. Nope. 7,000 of them were loaded at 70 cents, 75 cents. 7,000 of them. So that was on February 4th. They bought 7,000 for cheap. That's a hedge. When you buy that far out of the money, it's a huge hedge. So the majority of this chain was the whole chain pretty much, yeah, was loaded when these things were 700 a piece, $7 a piece. Okay. So these are hedges. They're adding more hedges. Why would they do that so far out of the money? I don't know. Probably because maybe they're anticipating a drop this week, right? So because of the trade wars, there's a lot of risk for these large funds. So I don't like to pay attention to that so much, but I do like to focus on where the call side money is. Have they been selling a little bit deep in the money? And then try to understand what the likelihood of the move is going to be, right? Are they going to add calls this week here for Friday and then completely rip the chain and turn the chain from 400 million to a billion on call side? They very well could. They absolutely could, right? And all these puts get smoked, right? But they also could rinse the whole market, say down whatever 100, 200, 300 points into Friday, and then what happens? Then the whole chain flips from being 180 million on the put side to maybe 1 billion on the put side, right? So total value of chain for Fridays is really important to me. Not like super, I would say really. I'd say it's moderately important, right? So these are the things that I'm looking at. And just looking, you can see there was a lot of volume traded on the Friday put chain. Now, here's the question. How much of it actually sticks, right?
Yeah,
How much
because
of
it could
this
open up tomorrow and be gone, right?
100%. And that happens like a lot,
Yeah.
And one other thing we'll notice is where we open up tonight, right? That's going to be a big deal for the markets. Everybody thinks, oh, well, you know what? We're probably going to gap down. And then there's half the people thinking, oh, well, they gapped us down over on Sunday, 2 of the last 3 weekends or 2 of the last 2 weekends. So they're probably going to gap it up and fuck people. Yeah, they could. It doesn't really matter, right? But the only thing that really does matter is what happens with the money. Right? Where are they putting? Because this is not Joe Schmo and Banana and Jake Wajaki or whatever the fuck his name is, doing this. These are the big dogs that move the market.
All right, I just didn't want to. That's why I asked that question. I didn't want to overexcite myself by looking at it, and seeing the put side was heavy and the call side looked flat there. Okay, just nice info.
Yeah. So one other thing that is important, that is for this will be enough for about the chain work, but is when you see a massive fucking whale, like over 10 million hit in a block overnight. Let me know. If I don't see it, let me know because um I'll track them.
How much on a block? Like what would number you would see there?
Needs to be more than 8 million. Has to be more than 8.
Okay.
Um, and so this strategy, what I'm talking about here, has made me a lot of money. Both sides, right? So I've seen calls get loaded, and everybody's bearish. I'm like, oh man, that guy hasn't left. We're gonna go, and literally we just squeeze like crazy, and these guys do not flinch. It's a different way to trade. It's a very powerful tool, and when you combine it with some of the other stuff we do in the room, pattern analysis, pattern recognition, and what do you call it? Wyckoff and identifying intraday moves. Like you can fucking crush it, like very, very, very easily. You gotta be careful though, because you don't know what they're actually gonna do, because they could hold, like you guys saw, they loaded the 700 or those puts for Friday a long time ago, and they're down significantly. So if you follow those whales, you're getting smoked, right? And so we got to be very smart and strategic and make sure we don't hold for hope. If we're wrong, we cut it, take our little lick, but we know a downside move is most likely coming very quick. You have, my buddy who does buying and selling for the hedge fund telling me they expect a 10 to a 20% correction before June. Like, that alone is a big fucking deal. They're most hedged they've ever been in years. Like, that alone is a big fucking deal, right? If you have a small account, buy some June puts. Not a big deal. And just layer in. If we go higher, nibble one more. If we go even higher and go to 6,200, okay, then in that place at that time, we want to consider where we're at and maybe fucking load, right? But you maybe have a starter position if you have a decent size account. Grab one put as a marker for June, right? One put as a marker. Because if we do get a 10, 15% correction, the thing's going to explode, right? So if we do go up this week or into February optics, because I do have a volatility thesis, right? That says we are actually going to volatility crush and go higher. Okay? So that's why I'm very kind of dip out early. Yep. All right. Later, brother. Have a great day. Appreciate you showing up. I have a volatility thesis that says we can go higher. Like, we're going to vol crush and go higher this week and into next week. So I'm very neutral, but I'm neutral to leaning bearish. But I have this other thing in the back of my head, like, I got to be careful, because I got to make sure if we do vol crush that we're all not loaded to the tits and puts, right? And that we are able to flip on a dime and go long. So I'm not just, looking at, these little things here. I'm looking at vol and dynamics of volatility and how it's crushing and the potential of what could happen. So I'm going to go to another strike too. Oh, now we're going to get into some other things. I like AMAT for an earnings play this week. Is VM on here? Yeah, he is. All right, perfect. All right. So I love AMAT. So me and VM's kind of like he's like our silent sniper for some of these earning plays. I give him data. I tell him what I'm seeing. He has data that he's looking at, and we can make some dirty ass calls like a firm one, right? The firm call was money. So let's take a look at AMAT quick. The schematic for AMAT chart.
I gotta get off. I appreciate all the info though, bro, this morning.
All right, later, buddy. Have a good day.
Later.
So let's take a look at AMAT daily. Okay, this is the chart, option chart. And what do you notice? It's starting to consolidate above the range. You can see here's the range at 179, 180. And it's starting. Hold on, why is that 1 minute? Oops, my bad. Oops, that's wrong. But anyways, it has a nice uptrend it's creating, right? And we have earnings here this week. I think it's Thursday. So this might be a fun earnings play. One thing that I am keeping an eye on is this. I've been tracking these whales on the 170 strike for almost a month. Where is this? Yeah. The 170 strike, there's 2,000 calls here. They've been sitting in these. They have not sold. Then also the 180 calls got loaded up too. Okay, you can see where they're loaded. Looks like they tried to sell 3,000 of them. I don't think that's a buy. Why does it not say that? Oh, so actually there was. So there's 3,000 volume, and that was a block order, right? So what's going to be interesting is to see if those were sold. So if this OI drops from 9,700 to 6,700, or if it goes up, because it says they're sold, but those could be bought at the bid, right? Those calls. So if it goes up, we're going to be looking to probably long this earnings. If it drops, which I don't know why they would cut, because like why wouldn't they sell up here when they were 2,300 a piece, right? Why would they do that when they've been buying in this range since? Look at this. So you have 3,000 bought here, 3,000 bought here, the whole chain has been bought in the zone between 1,400 to 600, right? And so the schematic that we're looking at has this thing going up. Now let's go to the chart here. Okay, so the AMAT schematic has us going up. Actually, it has us going up to a new high. So it's here. And then this thing should shoot up into 14 and then go higher like this. That's what we have setting up. It's a really nice one actually so far. It's doing well. But I mean, they could blow this whole thing up and just stuff it. So I just want to be mindful. I like this thing to the upside a lot. I think this next move up, if it moves up and then we have all this confluence and data telling us it's going to move up, it's going to hit this spot right there. So I want to just be, let me see here. So this is one of my favorite plays, I think, coming up. There's the channel right there. Okay, earnings could shoot us up into here. Yeah, That'd be nice. So the 210s are cheap for, February 10th. It's not a bad play, you know? So this would be an upside move. We'll be watching this week, maybe to get in this week to be able to take advantage of some volatility, some IV increase, right? So then we have SMCI. This is another one I'm really looking at this week. Earnings are on Tuesday. We're going to be looking at the data as well. So this one, SMCI and AMAT are going to be huge. And the sympathy to SMCI. So we have SMCI ripping hard. So the crazy thing is SMCI, this chain. So our calls right now for SMCI for the March that we loaded. So we loaded the March $45 calls at 1.4. So $140 right here. We loaded them right there at $28. Okay. They're trading at 400 a contract now. So that's almost, was that 100? That's like 250% roughly, I think they're at. So they could dump it. Absolutely. They could bring this thing down and then take it back up. I don't know if they're going to do that though, because if you look at the volume here in the bottom, the volume's increasing quite a bit. Right? I mean, there's very little sellers. There's a lot of short interest on this stock. All they have to say is, yeah, you know what? Our accounting problems are solved. Everything's good. And we're sitting here at $64 on Wednesday. Like legit, like that could happen. Like 100%. There's the only reason why the stock is down is because of the accounting bullshit. So this is going to be a fantastic lotto. I would probably think about hedging. Double it. Like say 2-to-1 hedge, call the put, and hopefully they don't volatility crush, right? If they do, then obviously that's the risk we take. That's gonna be top. It's gonna be top for a lot of people paying attention to the stock. So it's gonna be interesting if they pay all the call side out, right? Or if they try to crush everybody. So buying way out of the money with time is not a bad idea for a lotto. A firm still got room. Beautiful, beautiful lotto here, $240 to $750. Now they closed it above the range, and $24 million hit leaps after when they popped it up. 24 million hit leaps on this. So we're gonna keep trading this long. Okay. I love it. I have this thing going a lot higher. I think 92 is going to happen really quick. There's a volume gap here between 83 and 90, a huge volume gap. So you can see that price has not traded very much in this zone. When that happens and you see that, that means there's no buyers and there's no sellers here. Like there's not. Now, if we move up into that zone, right? It could skip numbers through that zone, like fly through it, right? So that's really important to understand. Go to Dell. Here's the Dell setup. Really nice setup. This is rejecting the 21, rejecting a previous supply. If I take a look at this, I have to look at the schematic. I think this is going up personally. Let me see here. But this is a sympathy just to SMCI, right? SMCI does good. This thing will gap as well. So we could trade that as well. I could see this thing hitting 120, which is pretty close, 120 to 125, which would be the fair value zone for this stock. You have a W on the RSI on the daily. That's bullish. You have bullish divergence playing out on the daily, where price, made a new low, but the RSI made a higher low. So that's bullish divergence. You have a W pattern right here. So how do we play the W pattern? Okay, when this thing breaks this zone right here, we'll say, when it breaks that, how the W pattern works. Shoots up, shoots up, breaks down, retests it, and then fucking goes. So what would that look like on the stock? It would be probably a push up, come back down, which would create a bull flag on the daily, and then it rips. This is February 27th. Oh, it's my birthday. They have earnings. So huge gap up here. Holy buckets. Look at this gap. What the? This is a massive gap. That's a big, big gap. What's this at? This is 141.21. And what's the low on this? Or the high? It would be 129. Oh, I take that back. Yeah, so they've half gap filled it. So yeah, it'd be 129.65. All right. So that's interesting. I also like MU, long side. To me, this thing has sprung, hit a spring. I don't know why it's shooting up here like this, or I think this is going to move up and out of here. There's another huge gap over here. We have a lot of money that's been hitting the tape, calls and puts. So what's interesting is like, all right, we have the chip sector, which is holding up really strong. It had a great bounce, right? But then you also have, other confluences telling us that we're going to go down in the market. So if we go down, like, what are these chips going to do? What is Nvidia going to do? Let me just quick dial this in. So I go to the low, it's 24, 27, 24. And what was the high on this? 23, 23. Okay, you have the market here setting up. What else is really interesting to me is this. Not many people are talking about this on Twitter, but I think this is really important to note. Anybody see anything notable on the daily here? Anyone? I'll tell you what I see. Evening star reversal. This is a textbook evening star reversal, guys. Not many people. I don't think anybody's talking about this. Evening star reversal on the daily. When was the last time we had one of these? I don't even see it over here. Oh, there it is, right there. Here, this is an evening star reversal, a perfect evening star reversal setup. Shoots up, bullish, indecisive, at the top of a range, Next day, boom, boom, boom. Get people going long. They got people going long there. You know they got people going long there. But why was this particular setup still bearish? Because you can be like, oh well, oh, we're gonna go up, we're gonna go up. No, no, no. We never closed above this doji right here on the spinning top. We never closed above it, above the actual open. So it's not bullish. It's absolutely very bearish. You have it closing low above below it. So it is a bearish sign, right? So this is a textbook reversal setup. And the day, this would be this day they faked people out. People got trapped long on this candle. And then they rinsed it. I would love to see that tomorrow. I know Johnny would love it too. Johnny would love to see them push this bitch up right into maybe 60 to 64, get people going long, and then see us fucking die. That would be sick. Big intraday reversal. That would be so fun. See, now we're prepared for it, right? We can see something like this playing out based on structure. Let's take a look at the RSI now on the 4-hour. It's crazy. These dumps, and they walk it up. Dump. So how low are they going to take this? Okay. The daily, what's the daily looking like? We have a high here. Oh, Jesus. This is bearish. Daily's got bearish divergence too. Uh-oh. The daily's got really nasty bearish divergence. This is gonna dump. It has to. The only way it doesn't dump is if they get the price going so high that the RSI invalidates it over this spot right here at 70.5. This RSI on the daily has to go so high. That would mean that price would have to go to 6,200. It would have to. Otherwise, the reaction based on divergences as well as the other stuff is that we're going to absolutely die. That'd be a big dump. We have resistance above us. Man, that would be sick. I would love it for them to moon us and then dump, but we're going to watch this really, really close. This is going to be a fun week. Let me just move this over quickly. Yeah. So it'll be interesting. Some decent volume that came in. Now let's take a look at the sectors. All right. What's 45? All right, so the implied move is going to be 45 points on this. All right, so that means it's 45 points, 59. Right, kind of right back into the golden pocket. Jeez. Okay. Let's go through some of these sectors. All right, so we have a high there. This is the first day. Friday was the first day in a while where they had all sell volume on it. Okay, that's the tech sector. That's kind of significant because they're buying, 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 buying. Well, they had sell volume here. Buy, 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 sell. We do have a little divergence forming. You have a hidden bullish divergence setting up too on the daily. You also have bearish divergence too on the daily. This is all fucked up on the XLK. So that's kind of, I would say, let's look at this as neutral to bearish. XLV healthcare flagging out. Looks like this could actually, it's either flagging. I think 1, 2, 3. To me, this kind of looks like a U-tab. Yeah. Anytime, buddy. Have a good day. Enjoy your day. This is healthcare. This would be a defensive play. I really think this is going to be a huge deciding factor. I do like how everything's pressured up. The EMAs are crossing over. But one thing that tells me this could distribute right back down is the selling volume up here. The last 2 days, they've been selling a lot of healthcare, a ton of it. Why would they be doing that if we're in the middle to bottom part of the range? Well, probably because they're going to bring us back down. So healthcare is looking a little bearish. Retail sector, this is the GameStop sector. Excuse me, does not look bullish. This is looking bearish as well. Okay, consumer discretionary sector. Breaking trend, clearly. This is not good. This is very bearish. This is Tesla, Amazon right here. We have a crossover about to happen. So Tesla and Amazon could be shorts. Okay, these are the heaviest weighted sectors in this ETF. If they pop us, where would they reject it? They would probably reject it here at 220. Yeah, 229. So I'll put an alert there. Okay. Then we have energy. Energy is really bullish. This looks great to me. Really good. I think we're going to be taking XOM, so the XOM, CVX, and Oxy. All right. Why does this look bullish to me? Anybody know? I'm looking at a couple things. This right here. We have a left shoulder, a head, and then the right shoulder's forming. Once this breaks our line, upside, it's going to shoot up. Okay, so if oil starts picking up, tech is going to fucking drill. Also, on the structure point, right? You have oil that shot up, came down, put a beautiful reversal candle in, right? So that's a bullish reversal setup. Morning star reversal, bearish reversal setup, a reversal daily candle, and then they ripped it. We caught this move on XOM that was ridiculous. They went from 90 cents to like $1.80 in like minutes, and then we had another reversal right here. But what's interesting about this reversal is it's holding a specific level right here. It's holding the top of this doji, right? And this wick held, and this Friday held. So I actually think this is bullish. Our risk is really clear here. If XO or XLE, the energy sector, breaks this doji on this particular support at 87.69, we don't really want to be long energy. Okay, and we could expect a pop in the markets. But if this holds in XLE, let me see here. 87. All right. So if it holds that level, we could trade XOM long, probably for a new leg up, right? To retest this other zone, we could trade it to this zone right here. That would really be nice. So now let's take a look at energy. This is how one of my mentors used to trade. And he'd look at the sectors, and this is, I love doing this. Looks at the sectors and says, hey, it's holding a really good support. And look at the structure. It's just back testing this. This is a reversal setup. He doesn't use the RSI, but we are. And then you're like, okay, well, let's just draw the trend. This area, very nice confluence here. We have an order block sitting underneath us. Is that an order block? No, it's not. It's actually a build. We can take it long. So then the top weighted sector or top weighted stocks would be XOM. Looks almost identical. And this looks nice. It looks like they're accumulating. Let's look at the volume. Really nice buy volume all in here. Not a whole lot of sell volume. A little bit there. Nothing crazy. But still looks bullish. Let's take a look at the 1 hour. They're kind of in and out, in and out, in and out. But the volume is pretty constructive to the buy side. Let's take a look at the weekly. Weekly's kind of neutral in terms of volume. Not a whole lot of buying going on, not a whole lot of selling, kind of neutral. We do have bullish divergence setting up. Yeah, we do on the weekly. Yeah, that's a powerful move. So they could come in because you can see, look at this weekly here. Look at how fast they move in. Boom, 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 boom. Just buy it up and look what happens. The price just flies. So we could see something like that. A lot of times at bottoms in a sector, you see them consolidate. They look like a bear flag and they just start consolidating and then they just rip. This looks really good. Wow. Wow. Look at this weekly. Look at this setup. It's hooked and holding. This could see a breakout. Just take a look at the daily. Very similar to what XLE was showing us. So there's a pinch happening. You have the EMAs pinched and you have compression into a zone. So if buyers continue to step in, we could see a nice pop up, or it's going to break down and come down to this trend line. Okay, Oxy, this thing's just still back testing and holding this area down here. Nothing crazy. Holding a pretty big level. All right. Now let's get into see here. What was the other stuff that wanted me to talk about? Oh, he left. All right, so we're gonna go back to the sectors and finish this sector analysis. So we went through energy. Now let's take a look at the financials. Financials are really extended out. You can see here the last time we got extended out away on the daily, we reverted right back in and sold off. So here came back in, held and ripped. Now we're in the same scenario. Extended out on the daily. I think we're going to see a mean reversion. So you guys see the theme here that's happening within these sectors. So I'm going to put bearish for XLF. All right, and then we'll take a look at XLC. Similar thing going on. We have bearish setup. Holding a pretty big support here at 102.68. We have bearish divergence, clear as day. Very clear. So this is Meta, Google, are the main ones in there. So I'm going to make a note, bearish on XLC. You guys remember the last time we did this? Like, well, we've done this a few times, but like before that massive move happened, December FOMC. Crazy. XME. Metals. Okay. It's holding a nice channel. It's trading in the channel. It looks pretty constructive. I would consider this neutral to bullish. So neutral to bullish, if it breaks this 61.89 level, yeah, then this can see a nice move up probably to this upper zone here at 65. That's like the FCXs, that's the steel trade, right? That's the metals and all that good stuff. However, there's going to be tariffs on metals and all this stuff too. So we need to be mindful of that. We only want to be trading US stuff long. Okay, so I would say XME neutral. Neutral to bullish. Then we're going to take out the consumer staples. You can say the same thing here. It's in a yeah, I would say this is more bullish actually. This is in a flag on the RSI and starting to break. Also, this flag has broken and it's retesting, and I could see it move up. So I would say consumer staples is bullish. Volume's decent, nothing crazy. XLP bull. What is consumer staple stocks? Pepsi. We'd have to kind of go through those, but yeah, Pepsi's a big one. All right. XBI, we don't need to look at it. XBI is fine. We'll look at it. Fuck it. Inverse head and shoulders setting up, fairly bullish. In a volume or underneath the volume gap, holding support. You could see these catch a bid. I personally we don't trade bios that much. So XLU, plus it's very light weighted. It's not weighted very heavy. XLU is decent weighting, nothing crazy. Holding a really big spot. XLU, what do we got here? Looks pretty solid, actually. consolidating above the EMAs. It's holding a really big level. So NEE is a good stock to trade for this. Industrials. I would say this is neutral to bearish here. Yeah, it's getting sold off pretty aggressively. It's in a bear flag. No man's land to me. Like it's underneath. So it's rejecting this area, this structure. Resistance. This structure held really well. This support right here. Huge move up. They sold that off pretty quick, and now it doesn't look like they're reaccumulating as much here. You can see this is a pretty big sell candle. So this is, I would say, neutral to bearish. All right, now let's go back to the last sector. XLB. This looks like distribution. Volumes increasing, and then they're getting out really quick. Like not a whole, yeah. So this doesn't look very good either. I would say, yeah. Okay, so let's go over the sectors now. We have XL. I would say X. Let's do. I didn't write down XLK. So XLK. I would say neutral to bearish. Yeah. So we have XLY. So the heaviest weighted sectors are showing bearish. XLF, XLY, XLK would be neutral to bearish. Right? And then we have XLC, which is the communication sector. That's definitely looking bearish. And then we have the defensive names in XLP, which is looking bullish. Metals are looking neutral to bullish, and energy is looking bullish as well. So when I'm looking at this, the different sectors and how everything's holding and distributing or reaccumulating, I'm looking at this like I think we're going to get a dump fairly quick. So, do you guys like how I did that? Any questions on how I just broke down all the sectors? So now I know which stocks that I would like us to start trading. Oh, hello. Interesting. This might be a good short here. It's oversold, so we need a pop. I want to see this thing pop up to 407. Yeah. Netflix. Yeah, that's so this look. Whoa, yuck. Look at this setup. Jesus. Very big extension. Yeah, it is. I believe, yeah, I'm like 90% sure it is. So Netflix has a reversal setup, like fucking beautiful. So Monday is going to be huge for Netflix. We might try to short Netflix this week and grab. I mean, we have a massive gap down here. This thing could be done. for the short term. What was the high on that candle? High was 916.40. The low on this candle was 50.76. I mean, a good target, amazing short would be targeting the gap or the retest of this low. So I bet you we got a rising wedge too. We do this. Yeah, it could also be a bull flag too. So they could bring it down up too. That's a scenario that could happen here. This would be a good short though. Yeah, that's some significant selling on Friday. Definitely. The volume staying pretty neutral. So tomorrow's a big day for Netflix. Apple, Meta, same thing with Meta. Like look at the selling the last 2 days, Wednesday, Thursday, and Friday was significant. Significant, but price floated higher. So this is another one. I know everybody's bullish on Netflix. I am too, but not long, not short term. The RSI is at 80. 80. We're 25 points away. Roughly, no, 30 point, what was it, 20, 30 points away from the 13 EMA. A retest of that zone, this is a big zone, would not be out of the question. I would say this would be a good spot to target on a short, right in here. Man, so you guys see how these sectors are lining up? Look at this. This is what took XLC down. It's broken the range down. This is going to be really interesting. This is the distribution top, right? So we could see Netflix come down and fill this gap down here. So the low on that is 81, or the 81.05, I believe, yeah. And then the high on this candle on the gap up, 76.26. All right, so, this could come down, start selling off into this gap. You get a little pull down from Meta. Let's take a look at, this is a bullish candle. However, it bounced right into resistance, which was our target. We got those calls. The target was this resistance here at 30. Right, it drilled it. So now there's a lot of supply up here. The volume is increasing. And I talked to my buddy whose mom works for NVIDIA. They got some news they're going to be announcing, apparently. I don't know. He didn't say if it's going to happen on earnings or after earnings, but it's going to be bullish for NVIDIA. So that doesn't mean NVIDIA can't consolidate in this range and come down a little more. So I'd say neutral on NVIDIA to bullish. Let's take a look at SMH quick. This is the pull-out chip sector. This I got a huge gap up here, or gap above us. It's been rejecting. Well, actually, it filled a portion of it. A lot of consolidation in this zone. I mean, how much higher can they really push this chip sector? And who is going to carry it? What's the low? Point, yeah, 62. Yep. And what's the high on this? 46. All right, so nice gap there. Rejecting the gap or the previous high. I mean, they're selling in here pretty good. You do have some little accumulation, and Friday they sold a decent chunk. This candle right here, this is a lot of volume. It looks like they kind of bought that back up. So this will be interesting to see what happens. I would say I'm neutral on chips. To me, chips could be in a in this move right here. UTIHS is this would be Sal. This, yeah, I think it's this setup right here. Okay, so I think that we're pretty much in this setup. So you can see here's PSY, right? Or sorry, yeah, PSY right here, boom. And then this was BC right there, right? This is really actually interesting. Oh, I know why. I'm on the 4-day chart. Oops. There. It's a little better. It's down. Why would this be AR though? That doesn't make sense. This is like a textbook Sal, or this could actually be the AR. I think this would be AR, then SOW, and then it shoots up, does this, and now it's building out this range right here, or it's going to be a distribution top, right? So let's go back to the D2. Yeah, the more I look at this, it's either going to distribute, which I think it could be a D2, like this setup more, where it doesn't break and make a new high like the UTAD, where it shoots up and it pops down. This actually looks like it's a D2, like very, very, very much so. And then it looks like they're going to drop it down. All right, that's on the weekly. Out. There we go. Perfect. China, still bullish on China. The dollar doing its thing. Let's take a look at the daily. Okay, here's my daily schematic. It's playing out really nicely. Drops down, popped up, rejected. We've been playing this really well through China. I would like to see it actually, hold 108 roughly and maybe pop up to 108.50. You can see a little bit bearish action early this week on China and then look to long it. Okay, BABA looking strong. Not a good candle though on the daily. Filled the gap, came back down. So let's see what the 4-hour looks like. Let's see if they bring it down and retest this breakout right here. That was a fun trade. We've been kicking Baba's ass. And same with PDD. That was a nice trade too. Been doing pretty well on this. So we've been doing well in China. I've been very pleased with how we've been trading it. A lot of money. There's a lot of money hitting the tape for FXI, which Baba is like one of the larger holdings. And Baba for February and oops. So and for March and June. So looking at this, we could see a nice move. This move comes into February early quick. I mean, or say in the first 2 weeks, China's gonna fucking rip hard, right? Then you get a bounce, shake out, and then it's gonna really rip, So we'll see how it sets up. But I like China too. So, other than that, anybody have any questions? Anybody have any other questions? All right. I'm going to put in copy and put in the earnings post right now. And Earnings Whisperer just started to do, it's called the highest volatility earning releases. So I'll put this up too. It's pretty cool. All right. And let's take a look at the data for the week and then we'll wrap it up. All right. So it's a economic calendar. All right. So oh, okay. It's a national holiday in Japan on Tuesday. No data Monday. And then Tuesday, we have Bowman speaking after the market closes. Nothing. Oh, Fed Chair Powell testifies 30 minutes after open. Interesting. All right. And then we have Wednesday. Ooh, hello. This could be cool. And the market green on Monday. Core CPI on Wednesday. So CPI is on Wednesday. Thursday, jobless claims and core PPI. Oh my God, this week is fucking stacked. And then Friday, retail sales. Oh, look. I have an interesting setup here, fam. With all this stuff here, you know, you have Jerome Powell testifying on Tuesday, and then on Wednesday, after CPI. This is going to be really interesting. Okay. And remember, they've been loading puts like crazy. Loading. Okay. And then we have Coinbase, I think, this week as well. Where you at, Coin? Very interesting. Look at the selling pressure on Coin Daily. They have earnings this week, Thursday. Oh boy. And they've been loading calls, which is crazy to me. It's either that or they're selling calls. They're selling or the volumes, but the volume I've been seeing says they're buying to open. Like they're buying the calls. That just blows my mind. Why would they be buying? And they've been getting cooked and they're going over the weekend. What's going to happen? I don't know. So I want to figure it out though. So this is going to be at the top of the list as well. We'll take a look at the schematics. This 4 hour actually looks pretty bullish. If this thing breaks to the upside, it's gonna rip hard. It should rip really hard to like 93. This RSI is coiled so tight. I bet you if we pulled up the squeeze indicator, it would show it building really hard, really tight. Let me see. Squeeze, squeeze, squeeze. Where are you at here? Yeah. Yep. 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 Look, there it is. I don't use this very often because this signal is the same shit that I read, only I like this better right here. That's the same shit that's showing right here. It just squeeze is building up. And you can see it, it's actually building to the upside, which we can see this, left shoulder, head, right shoulder. Once it breaks this consolidation range, it's going to fucking rip. So I would be leaning bullish towards coin through earnings. Yeah. Based on this, I definitely would be leaning bullish for sure. Last time the squeeze was like this, it fired like that. It could fire to the downside actually too. Let's take a look. Let's look at the history of coin when this thing's gotten into this same position. Here's coiling up. It lower. And then ripped up. Same thing over here. Oh, here it did not. Here it coiled and then exploded up. Same thing here. Oh, here it dumped hard on it. So it's like you can't really read too much into it. I guess we're just going to have to do volume price analysis and then look at the schematic setup and then just make an educated guess. But right now, I would say I'm bullish on coin because of the amount of call buying I've seen for this particular week. So we might play to the upside on coin. We'll see. Definitely worth a play. The implied move is going to be crazy on this thing. So anybody have any other questions? That's about it for today. All right. Well, I hope you guys have a great day. Who do you guys think is going to win the Super Bowl? Who are you guys rooting for? Thank you, brother. I appreciate you too. B17. Anytime. Welcome, LMA Honey. Welcome to the room. Go Eagles. Yeah, I'm going to root for the Eagles too. Yeah, I'd love to see the Eagles win. That would be cool. All right. Hope you guys have a great day. I'll see you guys in chat later. If I see something set up tonight while I'm watching the game, I'll alert it if you guys want to trade it. Other than that, who's Taylor Swift? I don't even know who that is anymore. She's a clown. Doesn't she move out of the country already? Didn't she say like she's going to move out of the country if Trump got elected? She should be gone right now. She should go visit VM. VM. Taylor Swift's going to come visit you, or she's supposed to. All right, guys. So you guys know what we're looking at. We did a lot of education today on the chain. and we took a look at the sectors. It's looking pretty bearish. Um, so I'm expecting pullbacks, and I'm expecting some moves down. So the best thing I would say is I would love to see futures open up green and see us push up to 60-60 to 60-65 if they don't rinse us. And if they rinse us, we're looking at support at 59.70, 59.68. That 59.70 pivot's a big deal. So have a great day, and I'll see you guys in chat. All right, peace.